Usually when we talk about measuring how the world is feeling, we look at traditional polls. You call up 1,000 random people, ask them a question, get a percentage, and just say, well, there it is. That is the public mood.
Right, but a poll is just a static snapshot. I mean, people can say literally whatever they want with zero consequences.
Exactly. But you step into the world of prediction markets, and suddenly that static snapshot becomes a high-definition live streaming video. And there's actual hard-earned money on the line.
Yeah, it is the absolute definition of putting your money where your mouth is. When you force people to back their opinions with their own wallets, all that extra noise just disappears. You get a very stark, sometimes uncomfortable look at what the crowd truly believes.
Because they're financially penalized for being wrong.
Exactly.
So today, we are looking at a massive data dump. We've got a highly detailed text snapshot of today's prediction markets, specifically looking at Polymarket and Kalshi from April 22, 2026.
And this isn't just about gambling. It's crucial to understand that these platforms have evolved. They operate as massive, real-time barometers of societal anxiety and confidence.
Right. And our mission for this deep dive is to decode what these millions of dollars in financial bets tell us about global sentiment, our collective anxieties, and exactly where the so-called smart money is hiding right now.
Yeah, we're going to examine three distinct layers of this ecosystem today. First, the massive macro crises dominating the tape. Second, we'll trace this sudden, staggering flight of capital into the sports world.
Which is wild to see.
Totally wild. And finally, we will look at the bizarre, highly niche, long-tail bets where traders are hunting for tiny mathematical edges.
Okay, let's unpack this, because the overall market vibe, at least according to the data in front of us, is officially being described as entering uncharted territory.
Yeah, that's the literal phrase being used, uncharted territory.
And it is not hard to see why when you look at the #1 trending market across both platforms today. We are talking about the U.S. government shutdown,
Right.
which has now been in effect for 67 days. Over on Kalshi, the market titled, "How Long Will the Government Shutdown Last?" is today's volume leader, and the sentiment has violently shifted toward a long-term deadlock.
Violently is the right word.
Yeah. The probability that this shutdown lasts at least 100 days, which, keep in mind, pushes us well into June, has surged to 54%. Just last week, that was sitting at 43%.
That is an enormous jump for a macro-political market in just 7 days. And just to break down the mechanics of what a 54% probability actually means here, traders are currently buying shares for 54 cents.
Right, because it resolves to $1.
Exactly. If the shutdown hits that 100-day mark, that share pays out a full $1. If it doesn't, it goes to absolute zero.
Wow.
So when we see millions of dollars driving that price up to 54 cents, it means the crowd is aggressively betting that Washington is fundamentally paralyzed.
And it actually gets darker. The odds for the Department of Homeland Security being funded before May 1st have just completely collapsed. They are sitting at just 11% today.
Yeah, that drop was brutal.
Now wait, explain that to me, because just yesterday they were trying to pass a stopgap measure to get this moving. How does the bottom fall out of a market that fast?
Well, it comes down to the failure of what's called a skinny bill yesterday afternoon.
Okay.
A skinny bill is essentially the bare minimum piece of legislation. It strips out all the controversial partisan demands and just tries to keep the absolute essential lights on.
Just to keep things running.
Right. So when a skinny bill fails, traders instantly realize that there isn't even a foundational agreement on the basics. It shows that the floor hasn't just lowered the floor, it has completely fallen out.
Why?
Yeah, so that 11% you're seeing, that isn't just pessimism. It's a mathematical calculation of systemic gridlock.
And just a quick reality check for you listening.
Yeah.
We aren't here to play politics or take sides on who is right or wrong in Congress regarding this shutdown. We have to be clear about that.
Absolutely.
We are purely looking at the math and the market behaviors contained in our source text. Our goal is just to read the thermometer, not to judge the temperature.
Exactly. And what's fascinating here is that the thermometer is telling us the broader economic context is deeply feeding into this political gridlock.
Right, because it's never just one thing.
No, never. Traders aren't just looking at Congress, they are looking at stagflation data. Right now, WTI crude oil, which is the main benchmark for U.S. oil prices, is hovering between $111 and $113 per barrel.
Which means we are in the middle of a sustained energy crisis. I mean, everything costs more to make, and everything costs more to transport.
Precisely. And because oil is that high, it fundamentally ties the hands of the central bank. Inflation is being driven by energy costs.
So the Fed can't step in.
Right. The Federal Reserve cannot safely lower interest rates to stimulate the economy without risking even worse inflation. That is exactly why the prediction market for exactly 0 Fed rate cuts in 2026 is trending higher today.
What's it at?
It's sitting at a 34% probability. You have high prices, stalling growth, and a completely paralyzed central bank.
It's a complete feedback loop. The economy is stuck, which puts more pressure on politicians who are also stuck. It reminds me of waiting for a massively delayed flight.
Oh, that's a good analogy.
Right.
Yeah.
Like at a certain point, say, when the skinny bill fails, the crowd just stops hoping for a quick fix. They just accept they're sleeping in the terminal and buy an overpriced neck pillow.
Yeah, they price in the despair.
I can.
And when you compound that economic reality with the failed skinny bill, you get a market that just gives up on a quick resolution.
So think of capital in these markets like water. When the political drain gets clogged by a massive government shutdown, that water, the millions of dollars in trading capital, doesn't just disappear.
No, it has to go somewhere.
Right, it overflows. It aggressively seeks out the path of least resistance. If political markets are paralyzed and your money is trapped waiting for politicians to agree, you look for a market that actually has a strict deadline.
You look for a scoreboard.
Yes, you look for a scoreboard. And that explains the explosion of money we're seeing in the second layer of our data today.
It absolutely does. There is a core market psychology at play here. When the macro-political and economic landscape is locked in an entrenched crisis with no clear end in sight, professional and retail money naturally pivots.
It just packs up and leaves.
Yeah, it actively seeks out environments where outcomes are definitive, where rules are transparent, and where timelines are brutally strict.
Which leads directly into the staggering volume we are seeing today in the NBA playoffs. The numbers here are just mind-blowing.
They really are.
Polymarket's 2026 NBA champion market is the undeniable liquidity king right now. It is boasting over $231 million in total volume.
$231 million, just on basketball.
Yeah. And the Oklahoma City Thunder have reached a 50% probability to win it all. They've hit the even money mark.
Meanwhile, the San Antonio Spurs have surged into the number 2 spot at 17%. And that is entirely driven by what the source calls Wembanyama momentum.
The hype is real. And we are seeing this micro action over on Kalshi, too. Tonight is the Game 2 slate. We've got the Raptors versus the Cavs, the Knicks versus the Hawks.
Classic matchups.
And the source data shows this specific slate is pulling in $1 million per hour in new trades.
Wow, $1 million an hour.
Yeah. And the New York Knicks are currently today's smart money favorite to even up their series. But here's where it gets really interesting.
Okay.
I have a hard time buying this 50% odds for the Thunder. Giving one single team a 50% chance against the entire rest of the league combined is just insane in basketball.
It's definitely historically high.
Right. Because you have injuries, bad shooting nights, erratic referee decisions. Are traders just blinded by recency bias, or is something else driving that massive concentration of money?
Well, if we connect this to the bigger picture, this isn't actually about basketball fandom or even pure sports analysis.
It's not.
No, it is about capital efficiency. Think about the trader who is sitting in that government shutdown market. If you put $1 million into a market betting the government will reopen in April, and then that skinny bill fails, your capital is trapped.
Oh, I see.
It is dead money sitting in a deeply ambiguous political machine that might not resolve until June.
Right. You can't touch it. And it's not working for you. You're just stuck holding the bag.
Exactly. Professional traders despise dead money. But sports offer a clean, mathematically resolvable safe haven. Traders are actively abandoning their hopes for an April government reopening.
So they're pulling their liquidity out of Washington entirely.
Yeah, and parking their capital in OKC futures. Why? Because a basketball game ends when the buzzer sounds.
Right. There is no filibuster in the NBA playoffs.
Exactly. A 50% probability on the Thunder might seem inflated from a purely sporting perspective, but from a trading perspective, it represents a highly liquid, transparent, and definitive asset.
Because you can actually trade out of it.
Right. You can buy into that market today, and if OKC wins Game 1, you can sell your shares tomorrow for a profit. You can't do that with a congressional stalemate. It's a flight to safety, ironically, through sports betting.
That makes perfect sense. It's not just, I think the Thunder are a dynasty. It's, I know for an absolute fact that the NBA guarantees a champion by June, whereas Congress guarantees me absolutely nothing.
It is the monetization of certainty.
The monetization of certainty. Wow.
Yeah, in a world lacking objective timelines, a strict schedule is a highly valuable commodity.
But while sports offer those clean, transparent resolutions, our source data points out that the long-tail prediction markets show a completely different kind of trader behavior.
The long tail is always where things get weird.
Very weird.
Mm.
Down here in the obscure corners of these platforms, we see traders hunting for a mathematical edge in highly erratic or sometimes really controversial events.
Yeah, it's where the limits of the wisdom of the crowd are truly tested.
So let's look at the geopolitical anomalies first. We have a market for a U.S.-Iran ceasefire by April 30. It is currently sitting at a 52% probability, but the data specifically notes that the volume is highly erratic.
Highly erratic is putting it mildly.
Right. And again, just to be completely transparent with you listening, we are entirely neutral regarding the U.S.-Iran conflict. We are solely relaying the data regarding diplomatic breakthroughs and how the market is reacting. We aren't endorsing any geopolitical stance here.
Understood. And the erratic nature of that market tells a very specific story about trust.
Well, we also see momentum building outside of geopolitics, too. There is a SpaceX market. Traders are giving a 54% probability for a SpaceX IPO announcement this year.
Yeah, people are obsessed with that one.
And they are doing this by intensely watching for new SEC filings, trying to parse the legal language before the broader public catches on. And then we have what might be my favorite data point in the entire source text.
Let me guess. The nicotine pouches.
Yes, nicotine pouches. Over on Kalshi, there is a highly niche market tracking ZIN US shipment volume.
It's so specific.
It is, and it has surpassed $366,000 in trading volume today.
Yeah.
This is entirely driven by people trying to front-run Philip Morris's earnings report later this afternoon.
Just unbelievable amounts of money for something so mundane.
Right. So what does this all mean? Are these prediction markets perfectly tuned, globally distributed intelligence machines? Or are they just a giant digital casino where people are furiously researching supply chain manifests for nicotine pouches just to get a 5% edge before a 4 p.m. earnings call?
This raises an important question about the fundamental integrity of these markets and how fragile the wisdom of the crowd actually is. You mentioned the U.S.-Iran ceasefire market sitting at 52% with highly erratic volume.
Yeah.
Our source text highlights a massive catalyst for that erratic behavior, the insider trading fallout.
Oh, right. The 16 accounts. The source mentions a controversy where 16 specific accounts made $100,000 each on perfectly timed Iran war bets.
Exactly. Now, a prediction market only works, mathematically speaking, if it aggregates the independent research and intuition of thousands of people.
Everybody bringing their own little piece of the puzzle.
Right. But the moment regular traders realize they might be betting against someone who already has the answers to the test, someone with classified diplomatic access, the crowd just evaporates.
They just walk away.
That insider trading controversy is exactly why the ceasefire volume is now so erratic. It's the financial equivalent of a bustling casino room going dead silent because everyone realizes the dealer is dealing from the bottom of the deck.
Nobody wants to play a rigged game.
Completely. Traders become deeply skeptical of betting on diplomatic breakthroughs when they know insiders might be warping the probabilities.
You just can't trust the line.
Yeah, so you get these wild spikes in volume from people who think they have a leak, followed by massive dead zones where regular traders just refuse to participate.
Which makes sense.
It proves that prediction markets are hypersensitive to information flow, but they are also vulnerable to the exact same informational asymmetries, the exact same insider advantages that plague traditional Wall Street stock markets.
So if I'm tracking the psychology here, they can't trust the geopolitical markets because of insider trading, and their money gets trapped in the political markets because of congressional gridlock. So what do?
They pivot.
Right. They pour $366,000 into guessing exactly how many millions of tins of ZIN were shipped this quarter.
Exactly. And let's look at why ZIN shipment volume is the perfect antidote to that frustration. A corporate earnings report is an objective, auditable reality.
It's a spreadsheet.
Right. Philip Morris will release a certified spreadsheet at 4 p.m. today, and that market will instantly resolve. There is no filibuster for an earnings call.
No.
And there are no classified diplomatic secrets involved in counting nicotine pouches. If you spend 20 hours researching consumer spending data and supply chain logistics, you can actually gain a legitimate mathematical edge over the rest of the market.
It's fair game.
Yeah. It is a quest for objective truth in an incredibly subjective, messy world.
That is a phenomenal way to frame it. The desire for a scoreboard isn't just about sports, it's about finding any metric that resolves cleanly. So to summarize what we've unpacked for you today, the overall market vibe on April 22, 2026 is officially defined as an entrenched crisis. Capital is fleeing from the messy, unresolved realities of a potential 100-day U.S. government shutdown.
It's running for the hills.
Right. The money is exhausted by political gridlock and terrified of geopolitical insider trading. So it is actively seeking refuge. It's parking itself in the clean binary outcomes of the world.
Whether that's the Oklahoma City Thunder dominating the Western Conference.
Or niche corporate data like Zinn shipment volumes ahead of an afternoon earnings call.
Because at the end of the day, the money always tells a story of where our confidence actually lies. And right now, the crowd has zero confidence in institutions and maximum confidence in scoreboards.
Exactly. So next time you want to know how the world is truly feeling, you might want to look past the evening news headlines, the static polls, and the political talking points.
It's all just noise.
Yeah. Instead, take a look at where people are actually putting their own hard-earned money. The probabilities usually cut right through the noise.
They really do. And before we wrap up this deep dive, I want to leave you with one final thought to mull over, drawing from a tiny, almost hidden detail in our source text.
Oh, I like the hidden details.
Yeah. So we talked a lot about the Oklahoma City Thunder reaching that massive 50% win probability for the championship and how traders are using it as a safe haven.
Right, the flight to safety.
But the source text actually proposed tracking an additional, much deeper action, looking at the specific series sweep odds for their first-round matchup.
Oh, wow. Wait, so not just betting them to win the series, but betting them to win in exactly 4 games with 0 losses.
Right, a perfect sweep. And I want you to really ponder this phenomenon. When a broad, incredibly difficult prediction like winning an entire NBA championship hits a high certainty threshold, like 50%, what does the human brain actually do?
That's a good question.
Do we accept the safe haven and just take the win? Or do we naturally start fragmenting our attention into hyper-specific micro-bets, like a series sweep, just to find a new mathematical edge?
We just can't help ourselves.
Exactly. It challenges us to think about human nature. Even when we flee to safety, can the human brain ever truly be satisfied with an obvious, straightforward answer? Or are we fundamentally wired to always manufacture new, complex risks just to keep the game interesting?